Um, I hope you guys can hear me though. So yeah,
Yes, we can.
beautiful. Hey, Mr. Charles, how you doing?
Yes, sir. I'm doing okay. Thank you.
Good, good.
Happy Sunday to you too.
Happy
Yep.
Sunday,
Yes,
uh,
sir.
Mr. Steve, Mr. Abiodun, Mr. Ayola. Welcome. So, I mean, the last asset I can remember we looking at was this, and I remember, I think we're looking at it the week before last, and we're emphasizing price to get within this region and then selling from there, which price has actually done that. So um, it's fallen off. You had a little bit of spike higher than necessary. I think, was it this day? No, it was here. Actually, there was no spike higher than necessary because I think this was the Monday. Let me just check the dates, reconfirm. So the week before should have been, today's the 6th, should have been 24th. So if I go check 24th, okay, it was this day. There was actually a spike, which was our range of entry was 89 pips, but we had that extra 39, which if you're done the ATR, and this is why the ATR is very useful, the ATR times 1.5, you shouldn't have been rated in any way. So you should have been fine because the ATR is actually saying 65 pips on a daily, but like saying 55 right here on the 4 hours. So if you had that 55 pips range, you should have been perfectly okay. 55 times 1.5. You should have been perfectly fine. That being said, oh, Mr. Oz has gone straight to the point. I like that. So thanks for Mr. Oz. So if you would like me to check a specific asset, you can just paste that in the chat and I'll look into that. Now, just a little bit of disclaimer. This isn't professional advice or saying you guys should invest your money into certain things, but this is my outlook towards the market and, possibly what I expect to happen, over time. So that being said, assets to look at. Okay. I'm just going to type that up. So we go, let me see. So we have three strategies that we use: COT, seasonality, and probability. COT is basically checking what the commercials are doing. Looking at what they're doing in regards to how they're buying or selling the market, and then we ride it off of what they're doing. They have bigger money, they're well equipped with information, and we seem to just tend to want to copy what those guys are doing, but we just don't copy them blindly. We also have to check if it's in alignment with the season. Every season of the year, asset move different ways based on the historical facts. Nevertheless, though, it's not always consistent. It's not always uh, it's not always 100% accurate. Hence why we follow the COT and mixing that with seasonality, just to give us a little bit more edge. And then we use the probability to determine entry dates. So using those three, I've personally figured out that the market tends to play out in most cases as expected. Last track of it was 87 to 93% win ratio over the past 4 years. So and so far, I think we've been looking good this year too. Nevertheless, it's just these are all just my own outlook to the market, and these are the strategy I built for myself that I figure that works. Mr. Uzo, I'm great, thank you. How are you doing? Hope you're doing good. So I'm just gonna list the assets. So the first one I want to look at Euro. I want to look at USD, AUD, CHF. Then we're gonna go JPY, GBP. Okay, GBP is a bit iffy at the moment, but nevertheless, we're still looking into it. Let me increase my mic a little bit just in case people can't hear me properly. Okay. So basically, what I do is I look into just one. All right, I look into the futures. I don't really look into the pairs, because when you have the pairs, you're looking at two things simultaneously. I find it easier just looking at one and isolating that one. And for example, if euro is going to get stronger, then most likely anything that trades against the euro would be weaker, you know. But if euro is going to get stronger, USD is going to get stronger. In situations like that, for example, I just tend to, you know, ignore the trade itself. You want to make one stronger than the other. That's what you want to look for, you know. But in some cases, your probability can give you it can give you an edge over the market, which if one asset is stronger than the other, but then you see a probability of one being over 60% or 70%, then you go for the one that is higher. So that being said, I'm going to look into it. Thank you very much. I missed you guys too. And it feels strange not doing the webinar, you know. Every time I skip it, it does really actually feel strange because I've been doing this for maybe 4 years now. I think about 4 years straight. So it's kind of like part of me already. So thank you though. So euro, USD.
So in this video, we're going to be talking about a seasonal chart and how they affect the market.
Yeah, well, apologies. I don't know why the playback started. Probably there's been an update on the website. And GBP. Well, yeah, for those that have the membership, I also noticed some people don't actually watch the video. They tend to ignore this video that's there, and the videos actually does explain how to use each tool. No. Mr. Abiel. Nah. I do know I sound good. I sound very wealthy, but I just don't like to hear myself talking every time. Yeah, so a lot of people tend to ignore the video. I do encourage people to watch it because when you watch, you kind of understand how to use the tool more better than, you know, just looking at it directly, you know. So I do encourage people to actually watch that. I'm gonna go to COT report. I've actually started the other way around. Normally I like to start with COT first rather than seasonality. I'm gonna close all of this because I don't need all of them open. So I'm just gonna do that again. I think we'll go USD, go JPY, Euro, we'll go GBP, we'll go AUD. I'm not sure, do we have NZD? We'll go CHF. Okay. So I'm gonna look into each one of these. BBC. Funny enough, I actually don't even listen to the radio. Don't know what it sounds like. So for USD, we got it going long. Now, what we tend to look at is just the commercials, and what we look at is the changes. We look at the changes for the commercials, right? And if they're going one way and they're going the opposite way the other, we just take the one that is biggest, right? So 174 is bigger than minus 855 in this scenario. We don't look at these guys. These guys are people like you and I and some banks. We look at these guys. This guy's got a lot of money, more information, so we look at what they do. So, and non-reportable, you don't really look at these guys neither anyway. So we just ignore. So for USD, long, and long means buy, short means sell. That's still loading. Next one is Euro. Euro, they're going heavily short on Euro. I don't know why, but we might find out. Next thing, so pounds, yeah, I already had a feeling on this one. It's minus, so we don't use anything. For that reason, anything pounds, you know, gaining strength this week or losing strength, I'm not interested. But we can look at any other asset trading. We could look at Euro GBP, for example. So if Euro is going short, for example, and heavily short, then we can sell Euro GBP, even though we are taking pound out of the list. And so AUD is the next one. AUD, the same thing. It doesn't really look good. So we're going to delete that. Let's see, CHF, they're going long. And the truth is, if you look at the strategy, right, it's actually quite easy. You know, just right now, we're practically almost done with the analysis. Why did this crash? Let me just load that back up. Where is it? We practically almost done with the analysis, and if I'm not mistaken, I just started looking at this analysis less than 4 minutes ago. So, it's about keeping everything as simple as possible. There's so many things going on in the market that if you have to learn it all, you're gonna get overwhelmed, and then eventually you start noticing your strategy doesn't work because there's so many things you're trying to implement at the same time. So, we go short on JPY. So that's it. That's all we need to know. So now we have Euro, USD, CHF, and JPY. We can swing this, if I'm not mistaken, over, let's say 10, 7, 14, over 23 ways. We can swing this. We can check over 23 assets just by looking at this. And there's many more you can check if you're looking at even, exotics, if you want. Well, that being said, let's go to the next one. The next piece of the puzzle, seasonality. So let's check the Euro seasonality, USD, CHF, and JPY. So Euro, we're currently on the 6th of November. Oh, right. Just by looking at Euro, Euro seasonality, we can see from the 29th of October, Euro is actually meant to drop. And then you can actually see the COT is also anticipating that drop. And currently we're right. Come again, please.
So that's very true, because the FOMC news that came out, the Fed rates, really pushed the USD to a better price for them to sell the Euro USD.
Yeah. So, and if you look at the seasonality of the Euro between the last 24 and the last 5 years, for example, you can see it actually will normally drop around November, which that cycle is what we're in right now. So if we're looking at it, for example, since COT is already showing that they're shorting it, and seasonality is already confirming that that short is most likely going to happen, then we can actually start shorting this from maybe Tuesday or Monday. So the entry for this would be Monday or Tuesday. You can short on the 7th, which market could consolidate a little bit because 24 years actually say 7 because it drops immediately after. 5 years also say 7, but the 15 years kind of says it's most likely going to drop, but just a little bit, tiny bit. So in scenarios like that, for example, you're going to go Euro short. So put a date next to it. So from the 7th to
and know your onions, man. This is really good.
Yeah, that's what I've been
because
doing.
The technicals are aligned as well, and it's amazing how it's relates to the seasonality, because I see it technically as well.
Yeah,
Tim is the boss, bro. Tim is the boss.
Nah, mate.
Yeah, he is, man. He knows his stuff, man.
He's been making his money since way back.
Oh, man.
Guys, it's not about being a boss. I'm literally like everybody else. I've literally learned so much more from actually doing this. So it's not about being the boss. I'm just like everybody else. I just want to share the information and make sure everybody makes money for their family. That's all. Euro is going to drop possibly until 11th. That's when the alignment stops. But if we look at the 5 years, that might continue all the way to the 21st. And also the 24 years support that, but the 15 does not. So when you have scenarios where, one is already going off tangent, what you want to do is just find the least, the last date where they're all correlated, which is on the 11th right here. So I'm just going to put that from the 7th to 11th. So I'm going to have that short between that time period. And if there's an opportunity, if there's more alignment, you can then hold that further to around the 21st. But to be on the safest side, just stick to the 11th. Then the next thing is USD. So let's see what USD is telling us. Okay, so with USD, what we're seeing is it's looking like the opposite, which is good because USD now is showing an increase. And it's also showing increase on COT. So what we do is we find the date that we have, everything is all aligned. So USD seem to align more around the 7th or the 8th. So it's between these 2 dates. Nevertheless, if you know euro is going to drop on the 7th, for example, then euro USD could actually, you can trade that on the 7th, depending on what the probability says. But what we can see is USD is doing the same thing. So between the 7th actually, and when does that end? 7th till about 16th. Yeah, we might have 16th or 13th right here. But everything actually stops on the 13th, and you have that deep. And then, so let's say 7th to 13th. It's going long. Remember, long just means buy. 2 13th. So we have that on USD. And the next thing we check is CHF. All right, let's see what CHF will tell us. So we're expecting CHF to go long as well. So let's see, do we have an alignment? Now with CHF, look, COT report is telling us that it should go long, but seasonality is telling us that we should go short. As you can see right here, I mean, there's a small term long on the 45 years. Nevertheless, it's looking like a short all the way through. So for that reason, CHF comes out of the list. We don't need to touch CHF. So it's just by process of elimination. You eliminate whatever isn't aligned, and then you focus on just the things that align for you. And that's how you make money. Some weeks, though, you would not see any alignment. And those weeks, go spend your money, go do some other thing with it. And when you find alignment, come back and make some more money. Literally, that's how the system works. So JPY COT report is telling us short, and we're trying to look for the short here. JPY does actually look like a short, overall. Nevertheless, we do have the peak coming back on the 6th, because the 15 years and the 4 years is actually saying buy, but the 5 years is saying sell. So what we do is we go in on when we find the biggest alignment, which is on the 9th, and that's going to sell up until the 16th. So JPY, so basically JPY, we got that short coming in from the 9th, and that's most likely going to last up until the 16th, right? So those are the 3 that we have so far. Does anyone have any questions?
Okay. You're doing great. You're doing great.
All right. Okay, so next thing we do is, now we have 3 base assets, right? We can swing this any way we see fit. So if we go, for example, and do a search for euro on the probability, what we do is we can open all euro assets.
Right? Hello, good evening.
Good evening. Yeah.
Can you hear me?
Yeah, I can hear you loud and clear.
Okay. I'll just, although it's not a question, it's just a contribution that I want to make.
Okay.
There's something that I've observed over time. If you see what you are looking at on USD index.
Yeah.
Check on the long side, USD have about 5,761 position. They added new position 174. Now they have on their short side, that's 9,092. They take out 855. Now over time, there's something I've come to observe is this. When they are heavily long or heavily short on both sides and are still maintaining it, most of the times the market moves accurately on that direction. But if you are looking at what you are looking at now, although they have huge positions on the short side, but they just closed out and added to some on loss. But generally, now, if you are still looking at, they are still having huge amounts of position on the short side. Although it's going to move towards the long side based on what Drizzy has been doing over time. But is more accurate when all positions are being aligned on that long, both previously and currently they are heavy on that side, is much more accurate. I don't know if you understand my point.
Yeah. I understand your point 100%. So basically,
like to explain in more details on what I'm saying, if you look at what they did on euro, is more accurate when we see such alignment. What you have on euro, euro is on the short side completely, both previous and current short.
Yeah. So I understand what you're saying. And the truth is, COT is a long-term indicator. It's not meant to be used for short-term, right? Now, what I've noticed over time is a lot of people want to be able to trade short-term. And that's why the strategy that I'm using right now, looking at the changes. So if I want to take a position, for example, that I want to hold for months, or let's say I want to hold for 6 months, for example, what you just said now is what I would do, compared to if I want to take a position, I'm only going to hold for a week. If I'm going to hold a position for a week, I cannot wait for the alignment to be at the extremes of both hands, because doing that, you're going to miss the short-term opportunity. Now, given that COT is a long-term, indicator, that's why we have seasonality and probability for the support for the short term and the intermediate term. So, for example, if you wanted to trade with just COT only, that's what you do. You just look for the extremes. Whenever it's gone beyond the setting point, that's only when you trade. Then you look for your entry and just close your chart and come back 6 or a year later and take your profit. But most people here right now, I mean, we're a very small amount of group right here, about 10 people. How many people would literally say, okay, you know what, I'm not going to touch my chart for the next 1 year?
Even Elon Musk won't.
Exactly. So
Elon Musk will take profits, man, in a week.
So that's the thing. So in regards to the, what you've noticed, you're absolutely correct. And that's where you're moving away from the trader mindset to the full investor mindset. You're in it for the long run. So, I mean, what I can see from your psychology is you've literally grown to a long-term approach, and that's where the biggest money is, but your patience will be tested, so you're correct. For the sake of the webinar sake, I tend to do this because if I do that, then we probably have webinar once every year or twice every year. So, and if we do that, a lot of people wouldn't even remember me anymore after like 2 months if I don't come up. So
2 months too far.
Yeah, and yes. Another point that I tried to point out is not that, although I do short term and long term most of the time, but the major point I'm trying to make is when we want to be more accurate. Now, is like what they did on euro is a clean alignment. Now, if we can have another trade that has such alignment on euro on the long side, you can pair those two, and if it should align on probability and seasonality, is perfect. So when you see the move will just consistently move till the week runs out. So over time, I've come to observe it. Now, if you should just have the opposite of what they did in euro in another pair, we pair the two of them, then we look at it. If it aligns, it's 90 on probability, and we check for our is okay for you to go.
So basically what you're saying, if they're going long-term right here, if this position is bigger than this, and this is also going in that direction, then the likelihood of the trade happening is high.
If long-term or short-term, I'm trying to pinpoint a lower risk trade that has low risk and more accurate. Now, if you have such alignment on euro, if you have the opposite, you can pay it. Like now, they are heavily short on euro. And if you check both previous and current, they are on one side short. Or from what we are doing on commercials. Now, if you should have such replication now on another pair that are heavily on the long sides, both previously and current, then is a very good alignment.
I think Dam has gone through that list. Oh, I want to ask, were you at the beginning of the call?
Mr. Ugo was there, yeah. He was here.
Okay, because I thought you had gone through a list of these pairs. You've done you sorted it out, and we're already in the phase.
The thing is saying is, I understand basically if we have the extreme happening previously and currently, then the likelihood of having the trade going our way is super high, meaning we have the lowest risk, which is correct.
Sure.
I mean,
he's correct. Yes,
he's 100% correct. So the thing is, in most cases though, we won't have that. Not every cases will have it, but whenever we have it, I'm guessing what approach Mr. Ogo might want to implement is we double down then on sizes of the trade, right? If I'm correct, Mr. Ogo, or correct me if I'm wrong.
For some time now, for over 2 weeks now, I've been getting such trade that both on seasonality and they have been using, for instance, or if you check, okay, the last previous webinar that we did, when we checked, I've forgotten either euro or something, or euro, I've forgotten that pair. It was super accurate. Yeah. So I just pointed out, you can look out for such. That's just my points. Thank you.
Okay. Thank you very much. Thank you. Thank you very much, Mr. Ogo. I do really appreciate that. So should I say my bank account? So I take some of the cut of the money you made. Since you make some money, I don't mind. Just saying. A quick 10-20% might be okay.
Oh well.
Oh, you don't want to give me anything, Mr. Ogo?
No, not me. He is Uso that spoke.
Oh no, I thought. Oh, Mr. Uzo. My bad.
Yes, it's Mr. Uzo.
Mr. Uzo. So what we saying? Should I send you my account details so I take quick 10% of that? Of the money you be making.
There's no problem about that.
Okay. Yeah, it's been recorded. So let's check. So let's see the euro. You know what? I can't go through every single thing. So I'll just check the euro ones that you said first. So let's check the euro USD first, and then I go euro CHF next, and then euro JPY. So let's see what date we on. So the 6th, euro want to go on the 7th. So what I tend to look for when it comes to probabilities, I want 3 days of an asset going in my favor. Because if you guys are familiar with how casino work, right, the house always wins because they have a percentage in their favor. So sometimes it's just a 1% or 2% or sometimes 4%, and that literally shifts the odds in their favor massively. Because if you played the game 100 times, 54 times they're going to win. Imagine. And if they're winning 54 times or even 51 times, you're still losing. So they'll still take your money. And that's how probability works. It's kind of telling us what percentage we have. I like to have it 3 days back to back. In this scenario, Euro USD, for example, it's not 3 days, but we have 2 days. So I can still trade this, but the risk is going to be slightly higher. So Euro USD. So Euro USD, we go short. 7th. And our entries set on that 7th, and on the 9th we might have a pullback. Nevertheless, since we're exiting on the 11th, we can hold this till here, to the 11th. So we put short till 11th, right? And then the next thing we can check Euro CHF. Where is that? I hope I didn't confuse anyone with that one. So that's how we do that, and then check Euro CHF. And the same thing applies. Is basically trying to look for where we have the alignment in our favor. So Euro CHF has the alignment from the 7th up until the 10th. So on the 11th, it goes against us. So even though we know we want to exit this on the 11th, because we've seen the probability, what we'll do is Euro. So Euro CHF. It's just like going to the barbers and getting a fade, right? And when you finish getting your fade, you want that, sharp lines alignment. So that's what this does for us. Probability helps you cut out the excess that you don't need.
It's fact.
Yeah. So we go short, and then we go from the 7th till the 10th, right? And the next one is Euro JPY. So Euro JPY, we cannot go in on Monday because Monday seems like the odds is not in our favor, but we can go in on Tuesday up until Friday. So giving us that extra. But keep in mind though, JPY might lose strength on the 9th. So a situation that we have Euro also losing strength. If JPY does lose strength on the 9th, we might be in profit and that might swing the other way. So you might want to set a tighter stop loss or trail your assets once you're in profit on Tuesday. on Wednesday, because if that happens and JPY ends up getting the shortest end of the stick, that you want to be out with whatever profit you can make. But if not, over time, I've actually seen that once the move starts, it's going to actually go till it finishes. So just a little heads up. So Euro, JPY, and then we're going to go short from the 8th till 11th, right? Now, for time's sake, I always try to keep this at 40 minutes, and that's why I didn't really subscribe for this Zoom stuff. I'm gonna go to the technical aspect of stuff. Now, let's use the EMA. Now, the way I do the technicals is slightly different, because if you've seen so far, I haven't actually looked at the chart. A lot of people look at the chart first. I believe the chart can mislead you if you're not careful. So what I tend to do on the technical aspect is I get something called wheel spread, and wheel spread kind of shows you what's going to happen before it happens, but it has a delay. So for example, right here where it picked not too long after price started going up, it's already telling you price is going to fall. Now, if you use wheel spread and mix it with seasonality, you're most likely going to be accurate, but then your percentages might be around 60% win rate, without the COT and the probability. So what happens is, been telling you price is going to fall, and not too long after price started falling, now it's telling us price is going to go up, and prices started going up. Now, because we're expecting this to go short and this hasn't pointed short, it's risky. If I go on the 4 hours, for example, it's pointing short on the 4 hours, but it hasn't really shown that on what's it called, on the daily. So for that reason, this has gone from literally low-term risk to high-risk trade, because William is not pointing. It's not pointing down. Now, for the sake of technicals only, if I was going to trade this on a technical only basis, what I'll have seen automatically is right here, price is most likely going to reject from somewhere around here. If I go on the 4 hours, for example, what I can see is right here, right there. So wherever price got to before, if you notice price movement, wherever it got to before and starts its move, price always come back to rate the people right there. So all you need to look for is wherever the move started from, and just put a resistance or support line underneath to just make sure that you're clued up or where you're expecting price to get to. Now, to make things a little bit more interesting, for example, what you can do is you can use a tool called what is that? Average. Yeah, so candle wick display. Now, let's put that aside. Candle wick display basically shows you the wicks. The wicks are just basically the tails, right? And what you tend to use this for is basically this. You want to calculate, if we're going down, for example, you want to calculate the down candle, the wick size of the down candle, an average calculation of the wick size. And then only when price gets to that range, you start looking to enter the market. So I'll give you an example in this case, and this might be the only one I can set example with. So with the Euro USD, we're expecting it to go short from the 7th, which is tomorrow. Now, if we calculate the average wick size, what we need to look for is a down candle. So for example, here we have 78 pips. That's a down candle. And then this one we have 225. Then we do plus, so we do 78 plus 225 plus 43 plus 96 plus, I normally do 114, and that gives 556. And if we divide that by 5, then it gives 111.2. So only if price moves about 111.2 pips, then I'm going to short this asset. That's example one. But if you measure from right here, where it is right now, to around here, it kind of correlates with the 111. This is 110. So it's just 1 pip different. So if you look at the market, it does actually tell you what it's about to do before it does it in most cases. Now that's for the weekly. Now what you want to do is also calculate for the daily. So that way you give yourself a range. The next one is 24 plus 101 plus 72 plus 11, and then plus that 31. And then if you do that divided by 5, it gives you 47.8 pips. So 47.8 pips should be, so let's see, somewhere around there. So let's just say, for example, say somewhere around here. Now, what you do is you have a range between here. I don't know where that is again. You have a range between here, and then, so we're going to take that out. You have a range between these sections right here to find your entry. So all you need to do is wait till price get to within this range to find your entry. And to set your stop loss and your take profit so you don't get raided, you go into your indicator. I think every MT4 has this. You know, I always set mine to 14, average true range to 14. And if you go on the 4 hours, right, it tells you 56. So your stop loss should be 56 times 1.5 or 56 times 2, depending on the size of your account. And that gives you 84 pips. So your stop loss is 84 pips. Now, all you need to do is wait till price gets here and then get your entry. And then your stop loss can be set at 84 pips, which is somewhere around there. The likelihood of price raiding you, it's super low if you do that, because most likely if you enter there, price is going to pull back to your entry and start going down. Now, your first take profit could be 54 pips. And then your second take profit will be 54 times 2 or times 1.5. And then your third take profit, you just let the trade ride until your exit date. So that's how you work the technical aspect without actually doing any, you know, trend lines and all of that. And if you have a support and resistance indicator, you can put that to match up and see if this aligns with your support and resistance indicator. If it does, then you have a very decent trade, and all you need to do is just wait for price to get to that zone, and then you short it or go long, whichever one you're looking at, you know. So that's all I have for today. For the euro, these are all I can check. I think there's an asset I did not check. And if you need to check that, just go to the website and grab the tools and you'll be able to do that by yourself. So thank you guys for attending the webinar. We have like 10 seconds left, I think. So thank you for attending, and I wish you guys a lovely trading week. If you have any questions, hit me up on Telegram. Okay, take care, and I'll have a lovely trading week, guys. Bye.
Thank you.